In this video, we'll go over how to scalp markets using price action rules. Now we're looking at S&P 500 mini futures. Time frame is 2000 tick chart, and this blue line is the 21 bar exponential moving average. Now as a price action trader, I have few tools in my disposal that are going to help me to follow price action and to follow price action rules. And I'm going to rely on channels and on key levels. This is the pre-market structure, and the first thing I need to do is I need to correctly identify my pre-market structure because I want to have an idea in what direction the market is going. Now this is the low for the day, this is the high for the day, and it's important to mark these important key levels because a lot of times they will form important support or resistance. Now this is quite a strong bullish structure because we have series of higher highs, high lows. The EMA is pointing up, confirming this is a strong bullish structure. So what I need to do, I need to find a pattern because there's almost always some form of a pattern that the price action is following. So I'm going to draw a wider pattern like this. First two swings will set up the trend line. Third swing will confirm it, and there's even a little confirmation right here. So we have bullish pattern. Now, this is important because structure in this market right now is bullish, which means I'm looking for high probability setups to go long. I'm looking for two-legged pullback at the key entry point, second entry long, or I'm looking for failed second entry short because second entry short goes against the main trend. Okay, even though the short-term structure right now is bearish downtrend, that doesn't mean that this will stop me for looking for prices to reach new high because this is the break of a trend line, and there's a trend line rule which says after break of a channel, traders expect to create new high. So this channel right here is the short-term correction part of a bigger pattern, and even though we have a short-term correction now, the big pattern needs to create new extreme according to trendline rule. But I need to draw the short-term channels even for these corrections, for these tiny corrections. Why? Because I want to know when it is okay for me to buy. And notice what we have. We have a bearish structure working lower, we have a break, and a new low formed. So from this point on, I know that it is okay for me to start looking for longs. And notice what we have. We have new low, first entry short, pullback, second entry short. So at first glance, this looks like a high probability setup. It is a two-legged pullback, second entry short at the EMA, but wrong. Why? First of all, downtrend played out with the break and new low, but more importantly, this is a small pattern, part of this bigger structure, bigger bullish uptrend. So this bullish uptrend is taking precedence. So I'm not taking second entry short. If anything, I want to see failed second entry short above EMA. We have a big bullish bar failed second entry short here, but 80% of this body is still below EMA, and there is no trigger above this bullish bar, so there is nothing else for me to think about. This is just a almost failed second entry short. There's no trigger higher, so I'm waiting. It is right around the open, and at this point on, the area is consolidation. Now we have a nice big bullish bar here, which is forming a triple bottom. An advanced trader can potentially go long here because downtrend played out with the break new low, triple bottom, and the uptrend going to rules needs new high, but beginner trader needs to wait for push above EMA and confirmation of bullish momentum. Okay, this is what you do when you're unsure whether you want to buy these lows right here, and there's a triple bottom. Push above EMA will seal the deal, and this is the last piece of the puzzle that you're going to create new high. Now, and there are two options how we can draw channels at this point on. We can either draw short-term uptrend like this with the break in new high, or I can find a wider pattern without a break. And which structure is correct? Well, the rule of thumb is that with trend corrections, you're drawing them wider, and against the trend corrections, which are bearish in the bullish uptrend, you're drawing them tighter. This is the rule of thumb that you're trying to follow for the most part. Now, this uptrend needs to get new high, and the bigger uptrend needs to get new high. And structure is bullish. There's pretty much nothing else for me to complicate. I'm only thinking long, and I'm thinking about long setups. New high, first entry long, second entry long, two-legged pullback. Even though this worked, this is not fully at the EMA. And when you're watching this live, there's really a gap away from the EMA because the EMA takes a little bit of time to catch up. So even in hindsight, there's a gap you can see. A lot of times there's going to be a little pullback, double trap, and market pushing higher. So I don't want to go long here. I'm not going to market even though it worked. The chances are high is going to push higher given all the rules that the channels are following. But you really need to see prices form close to EMA. So unfortunately, no high probability setup just yet. little correction and market push back above. Now, prices are pushing lower, but I'm not looking to sell just yet. I still need new high. Push above EMA, confirming bullish momentum, good. And I want to see right now a failed second entry short, new low, first entry short, pull back, and a failed second entry short is way too late. There was no failed second entry short here around the EMA that would help me to capitalize on this move pushing higher. Okay, so unfortunately, no failed second entry short here. You just have to be patient. But notice what is happening. If I take a step back and I zoom out, I can see that each new high is starting to be higher and higher. Why did we bounce here? And why did we bounce here? These are the questions I'm asking myself. And I can see that the structure is getting quite bullish. So I try to find a little bit flat the channel, copy, put it at the top. And if you're pushing higher right here, it kind of looks good because the first leg is quite steep. So it is typical that the second leg is going to be a little bit flatter. So once we broke the high of the day, this is the channel that I found, and this is nicely representing the bullish structure. Now, I'm still going to draw the shortened channels. I'm still following the rules of these trend lines. I have a break, attempt to create new low, new high, first entry long, pull back, second entry long. So the same setup is here, second entry long, but look at the signal bar. Bearish doji, bearish reversal bar, too stacked, too congested. By the time you get this big bullish bar, it's too congested. It is at the EMA, so context-wise, this is a great entry. But because the signal bar is so bad, for me to go long above, I cannot go long here, unfortunately. Even the high low confirming the second entry long is horrible. Bearish bar again, no bullish bar for me to go above, unfortunately. But the structure is bullish. I'm still looking for longs. It's pretty much given. Now, there are a bunch of first entries, which I'm not interested because first entries are not high probability setups. I keep resetting the counts after each new high is made. This high is higher than this and higher than this. We have small little double top, which resets the count. So this is a new high, first entry long, pullback, second entry long. And right here we have another second entry long. And this is a third second entry long. But notice this second entry long is finally forming nicely. And this was the high probability setup. And this was my first trade for the day that I took. Second entry long above EMA in bullish structure. Also, there's a small little double bottom, giving this a little bit more confidence. Any extra confidence I can gather to confirm my direction, it helps. So this right here is the second entry long, high probability setup. Quick enough for a scalp. You put your stop loss below the signal bar, scalp was made, and the prices are reversing. And now, notice what is happening. Suddenly, EMA is not pointing up. It's flat. We are swinging up and down, and even we are creating lower highs and lower lows. And it looks like the trend is losing steam. It looks like it will roll over. So once I was watching this, when I was watching this live, I redrew my trend line a little bit wider because I expected for prices to correct and pull back to this trend line. So even though you have a failed breakout right here, because most breakouts of these trading ranges will fail, and you would fade this with the direction of the main trend, so this is good. I believe it is a little bit too early because this looks like the correction phase that you're going to pull back lower, and even though it worked, you want to be a little bit patient here. You want to see failed second entry short above EMA. You never got it. Reversal down. Trend line is holding, but notice what you have. Doji, 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 doji. You get higher low. Doji, doji. 5-bar stack. Even though it probably worked for a scalp. Too much congestion. Too much sideways movement. Too much overlap. You have to be patient. You truly want to see strong push above EMA, which you don't get. You instantly push below EMA. And at this point on, once you fail to push above EMA and you're pushing back below, at this point on, you're expecting for prices to test this breakout area. These overnight highs, they a lot of times act as a magnet, and after breakout, prices may come back and test these breakout areas. So once you're breaking the trend line, you expect for prices to go all the way down here. And here we actually have a decent lower high that I'm going to mark because context-wise this is a great entry. Signal bar is too big. So only if the signal bar is smaller, you want to go short here, because once prices fail to reach above and push below, this is a nice bullish trap and you expect for prices to go all the way down here. So be patient. Don't try to buy blindly. Pay attention to what is going on here. Structure is changing and you're probably going to test the important key level overnight high. Now, prices indeed tested it. Resistance is acting as a support, strongly pushing above EMA. So this is giving you confirmation. Enough pullback has been made. Strong push up is resuming bullish momentum, and the new high for this main channel can be made. And we have new low, first entry short, pullback, second entry short. Now this is a second entry short failure above EMA. I am going to mark it even though I'm quite hesitant. I'm going to tell you why. Now I'm marking this because following the price action rules, it makes sense. Okay, double bottom here, bouncing off support, key level, push above EMA, confirming bullish momentum, and is a filled second entry short above EMA. But what I don't like, that I like to see a lot of times filled second entry short or filled second entry long for the matter, I want it to be part of one move, like this, new high, first entry long, second entry long failure. I want to see one move down. I want to bet on the momentum. Here I have move up, momentum stalled, leg down, leg up, so it is now more sideways. It's not part of this first move, and you also created new high already for the short-term uptrend. So for that reason, I'll be honest with you, I'm not most likely going to take it. But according to rules, I cannot pretty much say that this is too wrong. So if you took it, I can definitely see why, because some trades that are here, they're a little bit more aggressive. If you took it, not a bad entry. Now we have uptrend working higher, break new high, and notice what happened. Strong rejection down. And this was the last piece of the puzzle, which indicated that this uptrend may not create new high. Okay, at this point on, this is starting to look like a sideways movement, which means I'm sticking to the shortened channels. Downtrend working lower, has a break and needs to create new low. New low, first entry short, second entry short, and not only that, new high, first entry long, pullback, second entry long, failure. Now this is my second trade for the day, which I took, and I got really lucky here because I used a great limit order and I managed to get out before reaching these lows, which I really got lucky because you guys can see it quickly bounced. But I liked it. It was a second entry short and it felt second entry long. Second entry short and it felt second entry long. Downtrend needs to get new low. And at this point on, you have a lower highs. It is clear that the uptrend is not going to reach new high. And basically, this is what I was expecting. And this is a lot of times what the market will do on a setup like this. So I was quite surprised we bounced higher. One last correction because before bottom falling off. So if you took this for 8 ticks, at the lows with the limit order, unfortunately, we would have gotten stopped out. Need to make sure you have enough room to these lows, but either way, I feel this is a decent entry to take a chance on. It needs new low, second entry short, filled second entry long, great bearish single bar. For that reason, I liked it. Now, you're sticking to the short-term channels, break, attempt to new high, and market is pushing lower. Now, you're going to zoom out. You see that channel is not going to reach new high, and you're pulling back into this trend range, okay? So I'm going to follow the short-term channel again, because I still follow the trend line rule because I'm a price action trader and I have trend lines and key levels as a tool that are going to help me make this analysis easier. We have a break of a channel, new low formed, another break, another new low. So low of the day is the target now. I can find a wider pattern because we keep pushing lower and we keep creating new lows. So this is the channel I drew. When I was watching this, I already saw overshoot. But I wasn't sure whether the trend is really that strong. So what I did, I extended the overshoot a little bit down like this to match it here. Anyway, I get overshoot again. And overshoot means oversold territory, and it will lead to break of a trend line or possibly straight up reversal. Okay, so that means if I get second entry short at the EMA, I'm not going to take it. Even though this would be second entry short to like a pullback, had it got trigger, I would not have taken this trade because of the overshoot. I would need to see lower high, and I will really be cautious in that case anyway, because it can break the trend line or possibly reverse. So for that reason, you guys can see overshoot again, according to price action rules, led to break of a trend line, new extreme for the short-term uptrend, but it doesn't mean I'm looking for longs, okay? Just like earlier example, where the bigger pattern was up and the short-term downtrend was the correction, short-term uptrend is the correction, and bigger pattern is down. I expect low of the day to be reached, okay? So I'm looking for short setups. Second entry short, filled second entry long. New high, but there is no filled second entry long or lower high close to EMA. By the time you get lower high, it's too far down, and a filled second entry long is even lower. It's far away from EMA. Just because it worked here doesn't mean it's going to work next time. Next time you will take setups like this far away from EMA, you will have a losing trade. So don't get it twisted. I will not mark it just because it worked here once. you really want to follow the rules. This is not according to rules. It is so far from EMA. The trend just was really strong in the bottom, fell off, but not really a great entry. Now, at this point on, this is starting to look like a very strong downtrend. Why? Even though we have a break in new low, there's a point in price action when the trend is so strong on its own, when after years of experience, you will start to get the hint that there's possibly a wider pattern, because the downtrend really started all the way up to here. So that's over 50 point worth of a downtrend. So once I was watching this and we kept pushing lower, I kind of bet on the bias that it is going to be a little bit wider. And this was the wider channel that I adapted to. We have new low formed, first entry short pullback, second entry short. Now, on my chart, I don't like this entry too much. Even though the small bar closed a little bit outside, form a new high, on my chart is not too convincing. I will mark it because I saw other traders had great bearish bar that closed outside, created a new high and reversed down. If you had that signal bar at the EMA, you can go short, but on my chart, looking a little bit lackluster, still not convincing close outside this channel, I'm not going short here. Even though it is very tempting, you really need to see a stronger signal bar. But you can see that the structure is down and you're looking for high probability setups to sell. You have a lower high, move a little bit too far down, not touching the EMA, being patient. Now, during the short-term uptrends, you have a new high, first break of this downtrend, which means I expect new low for this downtrend to be reached. Okay? First entry long, second entry long failure, but there is no trigger below this bearish bar. And even if there is trigger below this bar, you cannot go short because the signal bar has too much of a bullish stem indicating bullish pressure. Not a great signal bar to sell. So there's no failed second entry short, and market created second leg up. Notice first leg up, second leg up. Nothing is changing. I'm still expecting new low for the main downtrend because that's the main pattern. Okay, main pattern is bearish. Bullish correction played out with the two legs up. First leg, pull back, second leg. Failed second entry long, high probability setup, two key entry points. You expect the new low to be made for this downtrend. So this is a great high probability setup, new high, first entry long, second entry long. Failure. There were additional two legs up and market kept pushing lower. Okay, important thing is to stick with the bias. Just because you're not pushing lower instantly, that doesn't mean that you can switch the gears. You're not going to go long because overwhelming bias was bearish. Notice prices pushed lower, strong spike down. Unfortunately, there was no setup, but as prices kept pushing lower and you still expect new low, only good setup I see is here, new low, first entry short, second entry short. Second entry short at the exponential moving average, and it looks like a first leg up, pullback, second leg up. And here you even have first leg up, pullback, second leg up. Uptrend played out with the break new high, another two leg up, pullback, second entry short. The reason why I'm going to mark it is because you have right now not only EMA, but also the trend line. And the more key entry points you have, the stronger the pattern is. But notice what you have, smaller double bottom, which a lot of times, almost every time, resets the count. So for that reason, I'm marking this only because you have two key entry points in play, and this spike in the channel is confirmed, and it really looks like a nice clean two-legged pullback, big bearish bar. It is so close, you almost feel that it's going to work. Such a clean two-legged pullback, two key entry points. You can risk it even though you have smaller double bottom, and market pushed lower and then went into close. Focus on your key levels, focus on the channels. Right here, stick to the short-term trend lines because EMA is getting flat, a lot of up and downs. So once you see this, you're mainly following the short-term channels. And once the trend is resuming, that's where you always want to follow the main bias, respect the corrections, and wait for high probability setups to form. So I hope the video was helpful, and I'm going to see you guys in the next one. Take care, everybody.